Good morning everyone. So in the last class we just completed this concept of cash flow statement. So you guys should be aware of how exactly do we prepare the cash flow statement under direct method as well as indirect method. Alright. So today let us start our discussion pertaining to this fresh chapter, that is accounts of banking company, electricity company as well as insurance company. So little lengthy chapter as I already mentioned in the previous class. So here we'll be learning how exactly does these particular companies prepare their financial statement. That would be the main objective behind learning this particular chapter. Alright. So if you guys remember, I told you that Schedule 3 will not be applicable for banking company, electricity company and insurance company. Now these companies, they have got their own law, right? Correct. So they will be preparing the financial statement as per their respective law. Correct. We will not be preparing the financial statement as per Schedule 3. Alright. So here there are certain aspects what you will have to remember with respect to preparation of financial statement for all these three different types of companies. Alright. See, the objective is very simple. Look at this. The objective behind learning this particular chapter is understand the form and content of the financial statement and other accounting issues of banking company. Similarly, form and content of financial statement and other accounting issue of electricity company. And finally, you will be learning the same with respect to insurance company also. Alright. So little bit of theoretical aspect they would have given initially, explaining what exactly is banking, what are banking companies, what are different types of banking companies. Okay, so how much is the cash reserve ratio which we need to maintain, okay, and other things. After that, it's important for us to remember these schedules. Okay, so for banking companies we have got different schedules which we need to prepare. Same way with respect to electricity company and insurance company. If you guys are able to remember these schedules, easily you guys will be able to prepare the financial statement. Okay, good amount of illustration is also given, close to like 11 to 12 illustration has been given. If you guys just go through these illustration, that would be more than sufficient. All right. So on that note, let's straight away start with this. Okay, so important aspects as usual will be mentioned in the notes. Okay, so I'll be covering the entire stuff, whatever is relevant and important, those points will be written in the notes. Theoretical part, illustrations, don't worry, each and every illustration will be solved in the class. All right. So let's talk about this. So when it comes to introduction, in India, maintenance of accounts and preparation of financial statement of companies primarily governed by the provisions of Companies Act. This you already know, right? So when it comes to maintenance of books of accounts and preparation of financial statement of company, this is governed by what? This is governed by Companies Act 2013 associated with its respective rules. However, there are few special category of company which are additionally governed by special act. Okay, so there are certain types of special companies which are governed by their own law. Okay, like the banking company, insurance company and electricity company. Look at this. However, there are few special category of companies which are additionally governed by some special act other than Companies Act 2013. Some example include what? Banking company governed by Banking Regulation Act, electricity company governed by Electricity Act 2003 and insurance company governed by Insurance Act 1938. Clear? So for banking company we have got Banking Regulation Act 1949. For electricity company we have got Electricity Act 2003, and with respect to insurance company we have got Insurance Act 1938. Alright. So in addition to administrative requirement, these act provides definite provision relating to maintenance of accounts and preparation of financial statement of the company. Now, not only the administration part, okay, so these act, they also give us information about what is the manner in which these companies are supposed to prepare the financial statement. Even those provision has been included in this law. Okay, so therefore, these aspects need separate and special discussion. Okay, so with respect to preparation of financial statement of these three types of companies requires special discussion is what they say. Alright, so simple thing. So normally when it comes to companies, you know that the provision of Companies Act 2013 and respective rules will be applicable. However, we have got certain special categories of companies, okay, like banking company for which Banking Regulation Act is applicable, okay, so 1949. Same way, electricity company, Electricity Act 2003 is applicable. Same way, insurance company, Insurance Act 1938 is applicable. Now these act, they doesn't only talk about the administrative part, they also talk about how exactly these companies are supposed to prepare the financial statement. What is the manner in which they are supposed to prepare the financial statement? So that is why when it comes to preparation of financial statement, we need to be discussing or we need to be looking into the provision of their respective law. Instead of just looking at the provision of Companies Act 2013, we need to focus on the provision with respect to these act, that is Banking Regulation Act, Electricity Act, and then the Insurance Act. Clear? All right. So here initially we'll be learning only with respect to banking company, then we'll be discussing the provisions relating to electricity company, and finally we'll move on to the insurance company. Okay. So accounts of banking company. Okay, so this would be the thing. Accounting of banking company. I'll just increase the size a bit so that it's visible to you all. Yeah. Yeah, look at this. In an economy, bank plays an important role in channelizing the savings of surplus generating units, that is household, into investment by deficit generating units, that is businesses. These financial institutions manage and maintain the flow of money in the economy and further assist in payment and settlement through various services. In short, today banks are the key to an efficient economic system. For an economy to run in an efficient manner, a lot of financial transaction has to happen, right? So all these financial transactions happen through these banks. Okay, so banks will be taking care of all the financial transaction. Okay, so making sure that all the payment and all the receipt is happening or taking care. Okay, are taken care. Look at this next part. They are given the meaning of few terminologies. So first thing is they have given you the meaning of the term banking. Okay, so they will not be asking any question, but you will have to remember the meaning of this term. Okay, so what is banking? So according to section 5B of Banking Regulation Act, banking means accepting for the purpose of lending or investment of deposit of money from the public, which is repayable on demand or otherwise, and withdrawal, okay, by check, draft, order or otherwise. Very simple definition. So what is banking? Banking is nothing but accepting the deposit from the public. Okay, you will be accepting the deposit from the public. For what purpose? Either for the purpose of lending or for the purpose of investment. So why do you think the bank will be accepting the deposit from the public? There might be two things. Either for the purpose of lending. See, when it comes to bank, we don't just deposit the money. We also will be availing some loan, right? Okay, we'll be getting some amount. We'll be borrowing the money also from the bank. Okay, so that is why the two objectives of bank is what? Accepting the deposit and lending the amount. Okay, look at this. Accepting for the purpose. For what purpose? For the purpose of either lending the money or for the purpose of investment of deposit of money from the public. You will be accepting the deposit from the public. For what purpose? Either for the purpose of lending or for the purpose of investment. Now these deposit, okay, bank cannot say that I am accepting the deposit from the public, I will not be repaying them back. No. It has to be repayable on demand. It is my money which is there with the bank, right? So at any point of time, if I wish to withdraw the money or if I want to take back the amount, the bank cannot say no. Okay, look at this. Repayable on demand or otherwise, and withdrawal by either check, draft, order or otherwise. I can withdraw the money either with the help of check, with the help of draft, with the help of order or any other mode for that matter. Okay, like debit card or any other mode. Clear? So very simple meaning. So accepting for the purpose of lending or investment deposit from the public which are repayable on demand, okay, or otherwise, and withdrawal by check, draft, order or otherwise. Okay, let me just write the meaning of the term banking. Banking refers to accepting for the purpose of lending or investment. What am I accepting? I am accepting deposit. Okay, so deposits from public which are repayable on demand or otherwise and withdrawable through check, draft, order or otherwise. This is the definition. Okay, exactly the same definition whatever has been given. You need not remember the section number and all. Okay, so in the examination you guys can just mention as per the provisions of Banking Regulation Act. You need not mention as per section 5B of Banking Regulation Act. If you remember, well and good, but if you are not sure, don't mention the wrong section. Just mention as per the provisions of Banking Regulation Act or any act for that matter. That would be more than sufficient. Clear? So same logic you can use it in the subject of law also. If you guys are not sure about the section, don't mention the section number. Clear? Alright, because the person who is evaluating your answer, no, he'll be in love with that particular subject and he'll not feel good if you guys are mentioning wrong section over there. Clear? So if you don't know, just mention as per the provisions of so and so act, that would be fine. Alright. Okay, now let us understand the meaning of the term banking company. So banking, we understood. What are banking companies? Those companies which are engaged in the banking activities will be treated as banking companies. Look at the meaning. So as per section 5C, so banking company means any company, okay, which transact the business of banking in India. Okay, so banking company is very simple. Okay, so any company which transact the business of banking in India. So those company, okay, so which are engaged in these banking transactions would be treated as what? Will be treated as banking company. Okay, so any company which is engaged in transactions of banking in India, okay, that would be treated as banking company. So as per explanation to section 5C as above, any company which is engaged, okay, look at this, any company which is engaged in the manufacture of goods or carries on any trade and which accepts the deposit of money from the public merely for the purpose of financing its business, as such manufacturer or trader shall not be deemed to transact the business of banking, okay, within the meaning of this clause. See, if at all I am a manufacturer or a trader, if I am accepting the money from the public for the purpose of meeting up my business objective, that will not be treated as banking activity. Okay, so just because banking includes accepting the deposit from the public, it doesn't mean that even if I'm accepting the deposit from the public for the purpose of the growth of my business, that will not be considered as banking. That is what has been explained in this point. You know it, right? Correct. So if a manufacturer, see, only if the banks are accepting these deposits, their main objective should be with respect to banking activities. For the manufacturer, what is his main objective? His main objective is to produce the goods or manufacture the goods. His main objective is not the banking activities. Clear? So even if he is accepting the deposit from the public, it will not amount to banking. Okay, or that company will not be treated as banking company. Is this clear? I hope you all understood this. Okay, so let's talk about the different types of banks in India. So when it comes to Indian bank, broadly they'll be classified into two: scheduled banks and non-scheduled bank. So what are scheduled bank? We'll be learning about is those banks which are listed in the second schedule of this particular Reserve Bank or Banking Regulation Act. Okay, that will be treated as scheduled banks. Okay, so the other banks will be treated as non-scheduled bank. Again, when it comes to scheduled bank, okay, it can be broadly classified into two more types: scheduled commercial banks and scheduled cooperative banks. We have got commercial banks as well as cooperative bank. Okay, cooperative, very simple. We have got urban cooperative banks and then state cooperative banks. Clear? So when it comes to broad classification, we have got scheduled bank and non-scheduled bank. Okay, so when it comes to scheduled bank, we have got commercial banks as well as cooperative bank. Commercial bank, cooperative bank. Again, when it comes to cooperative bank, two things: state cooperative bank, urban cooperative bank. Clear? Okay, so what about commercial bank? We have got public sector banks, private sector banks, foreign banks, and then RRB, regional rural bank. Okay, and again when it comes to public sector banks, nationalized bank and state bank group. Okay, nationalized bank and state bank group. Okay, so let us just write this particular broad classification of different types of banks. Okay, so I'll just write it in the same format, that is in the form of chart. Scheduled banks and non-scheduled banks. Okay, so again when it comes to scheduled bank, okay, so non-scheduled bank you need not worry. Scheduled bank, again if you see, we have got scheduled commercial bank and scheduled cooperative bank. scheduled commercial bank, and then scheduled cooperative banks. Clear? Alright, so then here we have got two things: scheduled urban cooperative banks, and then here we have got scheduled state cooperative banks. Simple. Alright, now when it comes to scheduled bank, okay, so when it comes to scheduled bank, we have got broadly four. Look at this: public sector banks, private banks, foreign banks, and regional rural bank. Okay, so public sector bank, private sector bank, foreign banks, and regional rural bank. These would be the four categories. Okay, and again when it comes to public sector bank, we have got nationalized bank and then state group bank. Okay, so state bank group. Clear? So this is with respect to public sector banks. Okay, so nationalized bank and state bank group. So this would be the broad classification. So very simple classification. Look at this. Okay, so these two are again relating to scheduled bank only. Okay, so this is broad category of scheduled bank only. Clear? So different types of bank, we have got scheduled bank and non-scheduled bank. So when it comes to scheduled bank, okay, non-scheduled bank, I'll just put it little this way so that you guys don't get confused. Alright, so scheduled bank and non-scheduled bank. So when it comes to scheduled bank, again we have got like commercial bank and cooperative bank. Cooperative bank, very simple. Okay, so we have got urban cooperative banks, state cooperative bank. Again when it comes to commercial bank, we have got public sector banks, private sector banks, foreign bank, and regional rural bank. When it comes to public sector bank, we have got nationalized bank as well as state bank group. Alright, okay, very easy to remember: nation and state. Okay, so nationalized bank and state bank group. Okay, so after this, let's see what exactly have they given. Thus, in India, banks are broadly classified into scheduled and non-scheduled bank. Scheduled bank are those banks which are listed in the Schedule 2 of Reserve Bank of India Act 1934. In other words, the bank which follow the guidelines of Schedule 2 of RBI are known as scheduled banks. Okay, the bank's paid up capital and raised fund must be at least 5. It is actually 5 lakh. Just make it as 5 lakh. Okay, it is not 5 rupees, it is 5 lakh. Okay, so these banks, if at all they are asking any MCQ, how much should be the minimum paid up capital of the scheduled bank? It should be 5 lakh at least, okay, to qualify as scheduled bank. So scheduled banks are liable for the low interest loan from the Reserve Bank of India and membership in clearing houses. On the other hand, the banks which are not listed in Schedule 2 of RBI is called as non-scheduled bank. Okay, so I'll just write the meaning over here. Scheduled bank, just remember 2 points. Okay, so these are the banks which are listed in the second schedule of RBI Act 1934. Okay, look at this. Those banks which are listed in the second schedule of RBI Act 1934 will be called as scheduled banks. Okay, so in other words, scheduled banks should follow the guidelines of, look at this, The banks which follow the guidelines of Schedule 2 of RBI Act. Okay, so they need to follow the guidelines of Schedule 2 of RBI Act. Clear? So the minimum paid up capital shall be 5 lakh. Just remember these points more than sufficient. Okay, so what about non-scheduled banks? These are the banks which are not listed in the Schedule 2 of RBI Act. Just remember this much, or any company or any banking company other than scheduled bank will be treated as what? That would be treated as non-scheduled bank. Okay, simple. Alright, so these banks are not allowed to deal in foreign exchange. Okay, so non-scheduled banks are not allowed to deal in foreign exchange. Non-scheduled banks are also known as local area banks, although there are only 4 local area banks in India. Okay, so these banks are not allowed, okay, to deal in foreign exchange. Okay, so they cannot abide by the provisions of this particular Schedule 2, so they won't be having any power with respect to dealing with the foreign currency or foreign exchange. Alright, so let's look into the next point. Scheduled banks are further classified into commercial banks as well as cooperative banks. You already know this, right? Remember the chart? Commercial bank and cooperative bank. Again, when it comes to cooperative bank, we have got urban cooperative bank, that is scheduled urban cooperative bank, and scheduled state cooperative banks. Clear? The commercial banks are those financial institutions which accepts the deposit and provide services like loan, credit, opening bank account, locker facility, foreign exchange and other digital services like mobile banking, internet banking, NEFT, RTGS, etc. So these are mainly profit oriented organizations. Okay, so cooperative bank are small scale banks institution run on no profit no loss basis for mutual cooperation and help. Okay, let me write this. Scheduled banks are further classified as follows. Okay, so first thing would be what? Commercial banks. Okay, so what are these commercial banks? So these are the banks which run mainly for the purpose of profit. Look at this. The commercial bank are those financial institutions which accepts the deposit and provide services like loan, credit, opening bank account, locker facility. So foreign exchange and other digital services like mobile banking, internet banking, NEFT, RTGS, etc. They are mainly profit oriented organization. Okay, so these are the financial institutions which accept the deposits and provide various services like loan, credit, opening bank account, locker facilities and other digital services like mobile banking, net banking, NEFT, RTGS, real-time gross settlement. Okay, so NEFT, RTGS, and then what are the other services? Yeah, internet banking, mobile banking, done. Okay, so they are mainly profit oriented entities. Look at this, they are mainly profit oriented organizations. Okay, they are mainly profit oriented. So their purpose is to make some profit. That is why look at the meaning or look at the term which they use, commercial bank. Okay, what about cooperative banks? So these banks, okay, their objective is not to make profit, rather to provide some services to their members or the account holder. Look at this, cooperative bank are small scale banking institution not run on no profit no loss basis for mutual cooperation and help. Okay, so these are small scale banks which run on no profit, no loss objective, and their objective is to provide, look at this, is to provide mutual cooperation and help. Okay, so is to provide mutual cooperation and help. Easy. Okay, so scheduled commercial bank include, okay, so we have got public sector bank, private sector bank, foreign banks, okay, and regional rural banks. Same thing is being given. Okay, we have got public sector banks like state bank groups, okay, and other nationalized banks, private sector banks, foreign banks which are incorporated in foreign country, and regional rural bank operating at the regional area to facilitate backward people in the society. In addition, Reserve Bank of India acts as the supervisor of the banking institution and money market regulation. So anything relating to banking transaction, it is regulated by Reserve Bank of India. Simple. All right. Let's talk about the business of the banking companies. What exactly are the activities which they carry on? Okay, as per the provision of Section 6 of Banking Regulation Act 1949, a banking company may engage in any one or more of the following forms of business in addition to the business of the banking. So banking business you already know. Okay, so accepting the deposit and lending the money. Along with this, what are the other business activities wherein these banking companies can engage themselves? Okay, so let's just look into it. The first thing is borrowing, raising and taking up of the money. Okay, so the lending or advancing of money either upon or without security, the drawing, making, accepting, discounting, buying, selling, collecting and dealing in bills of exchange. You can either draw the bill, you can either accept the bill, you can either discount the bill, you can just buy, sell or collect the bills. Okay, so it is not only the bills of exchange but also other negotiable instruments like hundis, promissory note, coupons, okay, like zero coupon bonds, draft, bills of lading, railway receipts, warrants, okay, debentures, certificates, scripts and other instruments and securities. Okay, whether transferable or negotiable or not, doesn't matter whether they are negotiable instrument or not. Okay, the granting and issue of letter of credit. Okay, this is mainly included when it comes to foreign exchange transaction. Whenever you are exporting any goods, you will require this letter of credit. Okay, so letter of credit, traveler's check and circular notes, all these things are with respect to foreign exchange transaction. The buying, selling and dealing in the bullion and specie, the buying, selling of foreign exchange including foreign bank notes, the acquiring, holding, issuing on commission, underwriting and dealing in stock, funds, shares, debentures, okay, debentures, stock, bonds, obligations, securities and investment of all kinds, the purchasing and selling of bonds, scripts and other forms of securities on behalf of the constituents or others, the negotiating of loans and advances. A lot of services is being rendered by the bank guys. Okay, so if you see in the very first point only, it is not only the borrowing, they have included each and everything. Okay, so like bill of lading, letter of credit, so holding any foreign currency, purchasing or selling the bullion, accepting, drawing, endorsing or collecting the amount with respect to bills of exchange, promissory notes, hundis or any other negotiable instrument or otherwise. Okay, everything is being given over here. Okay, so transaction relating to shares, debentures, bonds, coupons, everything can be entered by the banking companies. Clear? All right. So then the next thing is acting as agent for a government or local authority or any other person or persons, the carrying on of agency business of any description including the clearing and forwarding of the goods, giving of receipts and discharges and otherwise acting as an attorney on behalf of the customers, but excluding the business of managing agent or secretary and treasurer of the company. Okay, so the banks can act as an agent with respect to either government or local authorities or any person for that matter. Okay, so they can act as an agent, so they can look at this, they can clear the goods, they can forward the goods, they can accept the money or discharge the settlement. Okay, only thing is they should not be acting as managing agent. Okay, but excluding the business of managing agent, they should not be acting as managing agent or secretary or treasurer of the company. They should not be acting as secretary or treasurer of the company also. They should just be acting as mere agency business. Okay, they should just be acting as agent, not the managerial agent or secretary or treasurer. Okay, they should not be acting as secretary, nor they should be acting as treasurer. Okay. Then the third activity wherein they can enter is contracting for public and private loans and negotiating and issuing the same. Okay, so this is with respect to public and private loan. Okay, negotiating and issuing the same. They can lend the amount after all the negotiation with respect to interest. Okay, then the next thing is the affecting, ensuring, guaranteeing, underwriting, participating in the managing and carrying out of the issue of public and private, of state, municipal or other loan of shares, stock, debentures or debenture stock of the company, corporation or associate, and lending the money for the purpose of such issue. So they can also actively involve with respect to issue of shares, underwriting of the shares, guaranteeing the shares. Okay, shares, debentures, stock, anything for that matter. Clear? Then the next point is carrying on any transaction. Okay, carrying on and transacting every kind of guarantee and indemnity business. So they can also provide some guarantee. Okay, so they can act as indemnity for any kind of thing. So they can provide the guarantee or surety basically. All right. Then the next activity is managing, selling and realizing any property which may come in the possession of the company in the satisfaction of any part settlement of any of the claim. Clear? Alright, let's look into the other services which are provided by the banking companies. All these things not much important guys, because various services, whatever you name it, it will be provided by the banking companies. Look at this. Acquiring and holding and generally dealing with any property or any right, title or interest in such property. So they not only deal with shares, securities, okay, so loans and other things, but also relating to properties. They also give guarantee. Alright. So undertaking and executing trust, undertaking and administration of estates, executors, trustees or otherwise. So they can also act as trustees. So establishing and supporting or aiding in establishment of support or associate, institution, fund, trust and convenience calculated by the benefit employees or ex-employees of the company or the dependent or connections of such persons, granting pensions and allowances and making payment towards insurance, subscribing to any guaranteeing money. So they can also support, okay, any other establishment by providing any service for that matter. All right. Then the next thing is the acquisition, construction, maintenance and alteration of any building or works necessary for convenient for the purpose of the company. So for the purpose of construction also they will be providing certain loan, right? Correct. So whether it is with respect to acquisition, whether it is with respect to construction, whether it is with respect to maintenance of any building wherein the business will be carrying on its activities, those kind of services also can be provided by the banking companies. All right. Okay. So after this we have got selling, improving, managing, developing, exchanging, leasing, mortgaging, disposing, turning into an account or otherwise dealing with all or any part of the property or right. Okay, so it also deals with the property. Okay, so selling, improving or managing of properties. So let's look into the other things. Okay, so acquiring and undertaking the whole or any part of the business of any person or company when such business is of nature enumerated or described in the subsection. So if it is something related to their similar business activity, they can also acquire. Okay, so let's say a particular bank is running under loss. Okay, if at all they want to acquire that particular bank, they can still do it. It is well within its activities limit. So doing all such other things as are incidental to conducive to the promotion of the advancement of the business of the company. Any activity which is incidental to all these points, whatever has been mentioned above, they can still do it. Any other form of business which the central government may by notification in the official gazette specify as form of the business in which it is lawful for the banking company to engage. In the official gazette, if the central government is prescribing certain activities as lawful, even those activities can be carried on by the banking companies. Clear? All right. So restriction on business of the banking company. Now these are the services which are restricted by the banking companies. It means they're not supposed to engage in these activities. Let us understand what exactly are those. Section 8 of Banking Regulation Act imposes certain restriction on the business of the banking company. These are as follows. No banking company shall directly or indirectly deal in buying, selling or bartering of goods except in connection with the realization of security given to or held by it. So they cannot engage into buying or selling of goods or barter of goods. They are mainly engaged with respect to service, right? They are supposed to provide the services. They cannot engage in trading related activities like buying and selling of goods or barter system for that matter. Okay, so no banking company can engage in any trade or buy, sell or barter goods of other or otherwise than in connection with the bills of exchange received for the collection or negotiation or with such of its business or is referred in the above clause. See, when it comes to buying, selling, okay, they cannot buy, sell or barter or exchange the goods. But when it comes to bills of exchange, yes, they can endorse the bill, they can collect the bill on behalf of the drawer and other things. Hope you guys understood this. Is there any doubt, any confusion? Can you guys remember this? So there are certain activities wherein the banking companies cannot engage themselves. So that is mainly with respect to buying, sell or barter of the goods. Okay, just remember this much. Okay, so restriction as to payment of dividend. Okay, so let us understand this particular thing. Before paying any dividend, a banking company has to write off completely all its capitalized expenses, including preliminary expenses, organization expenses, share selling commission, brokerage, and the amount of losses incurred by tangible assets. However, a banking company may pay dividend on its shares without writing off. Okay, what? The depreciation in the value of the investment in the approved securities in case where such depreciation has not actually been capitalized, the depreciation in the value of its investment in shares, debentures or bonds, okay, other than approved securities in any case where adequate provision of such depreciation has been made to the satisfaction of the auditors, okay, of the banking company. The bad debts in any case where adequate provision of such debts has been made to the satisfaction of the auditors of the banking companies. Okay, so important point to remember. All right, let me just explain this. So when it comes to restriction with respect to payment of dividend, okay, so what are the points which the banking company has to remember before paying any dividend? Before paying any dividend, a banking company has to write off, okay, so it has to completely write off what? All the capitalized expenses, including the preliminary expenses, organization expenses, share selling commission, brokerage, amounts of losses incurred by tangible assets. However, a banking company may pay dividend on its share without writing off of these items. Okay, so let me just briefly write this particular point down. So restriction on payment of dividend by banking company. So the very first point which you need to remember is the banking company shall completely write off all the capitalized expenses, including the preliminary expenses, share selling expenses, okay, brokerage commission, look at this, organization expenses, brokerage or any amount of losses. So share selling expenses, brokerage, any losses on capital asset before declaring the dividend. Okay, this is the first point which you need to remember. Okay, so whatever losses has been incurred with respect to tangible assets, any amount with respect to preliminary expenses, organization expenses, share selling expenses, brokerage, all these things has to be written off. Okay, so however, a banking company may pay dividend on its shares without writing off of the following items. Okay, so however, a banking company may pay dividend without writing off of the following item. So let us understand what exactly are those items. So we have got three items. So the depreciation in the value of the investment. Okay, so value of investment in approved securities in any case where such depreciation has not actually been capitalized or accounted for any loss. Same way, depreciation in the value of its investment in shares, debentures or bonds. Okay, so other than approved securities is in point number 1. So other than approved security will be in point number 2, in which case the adequate provision, okay, for such depreciation has been made to satisfy the auditors. Okay, first thing is depreciation in the value of investment made in approved securities. In which case the losses, look at this, in which case the depreciation has not been actually capitalized, okay, in which case the depreciation has not been capitalized. So I haven't capitalized this particular reduction in the value of investment. So first thing is depreciation on this particular value of investment, you need not write it off. Why? Because you haven't capitalized it. Okay. The second thing is depreciation in the value of investment in shares or debentures other than approved securities provided adequate quantity of provision has been created, provided adequate provision is created and the auditor of the banking company is satisfied with the same. Clear? The last point would be bad debts in case where adequate provision for bad debts is being maintained and the auditors is satisfied. Okay, so the third thing would be bad debts for which adequate provision is maintained and the auditor of such banking company is also satisfied. Hope you guys understood this. Okay, so these are the 3 points which you need to remember. So depreciation in the value of investment in approved securities, provided what it is not being capitalized. Depreciation in the value of the investment in shares and securities other than, okay, share securities, debentures other than approved securities on which we have created substantial amount of provision and the auditor is satisfied. Third thing is bad debts with respect to which an adequate amount of provision for bad debts is maintained and the auditor is satisfied. Clear? Alright, let's just look into the next concept. Okay, so minimum transfer of profit to the reserve fund. Okay, banking company, how much is the minimum profit which has to be transferred to reserve fund? Okay, this is important. Every banking company incorporated in India is required to transfer at least 25% of its profits to reserve fund. Okay, so you will have to remember this. They'll have to transfer at least 25% of the profit to the reserve fund. Okay, so every banking company each year whatever profit they have made, at least 25% has to be transferred to the reserve. The profit of the year as per the P&L account prepared under section 29 to be taken as base for the purpose of such transfer and transfer to reserve fund should be made before declaration of dividend. Okay, so before declaring the dividend, whatever is the profit which you get as per the provision of 29 of what? Section 29 of the Banking Regulation Act it is. Okay, so this particular profit 25% has to be transferred to reserve fund. If any banking companies make any appropriation from the reserve fund or securities premium account, it has to report to the Reserve Bank of India the reason for such appropriation within 21 days. Okay, let me just write this. Minimum transfer to reserve fund. Every banking company shall transfer at least 25% of the profit before declaration of dividend to its reserve fund. Okay, so every banking company should be transferring at least 25% of its profit to the reserve fund. So in case it is appropriating, look at this, if a banking company makes any appropriation from the reserve fund, that is utilization from the reserve fund or the securities premium, it has to report the same to the RBI within 21 days. Okay, so in case any banking company . makes any appropriation from the reserve or the securities premium, then it has to report the same to Reserve Bank of India within 21 days. Clear? Alright. So then the next reserve is the banking company has to maintain would be what? Cash reserve. Okay. So every banking company not being a scheduled bank has to maintain, okay, a cash reserve ratio of at least a percentage of the total of its demand and time liabilities in India as on last Friday of the second preceding fortnight as specified by the Reserve Bank of India from time to time. So cash reserve can be maintained within itself or by way of balance in the current account with the Reserve Bank of India or by way of net balance in the current account in one or more of this aforesaid ways. Okay. Now let's talk about this cash reserve ratio. Okay, first thing is know the meaning of this particular term. What is this cash reserve ratio? These banking company has to maintain certain amount of reserve, okay, with the RBI or in the current account. Look at this. Every banking company not being a scheduled bank, okay, they're not talking about the scheduled bank over here, okay, they're talking about the non-scheduled bank. Every banking company not being a scheduled bank has to maintain a cash reserve ratio for at least a percentage of the total of its demand and time liabilities, okay, in India as on last Friday of second preceding fortnight as specified by the RBI from time to time. So this particular CRR rate will be specified by RBI from time to time. From time to time they'll be changing. That will be ranging somewhere between 3 to 15%. So as of now it is 4%. So 4% is what is the CRR ratio as of now. Okay, so minimum 4% of what? Its time and demand liabilities, okay, has to be maintained as on last Friday of second preceding fortnight. Okay, I'll just write this. So every banking company shall maintain such rate of its, okay, so of its what? Look at this, of its demand and time liabilities in India, of its demand and time liabilities in India, okay, on what date? As on the last Friday, okay, of second preceding fortnight, okay, so as on the last Friday of second preceding fortnight. Okay, let me just tell you what exactly are they trying to mention over here. Okay, so let's say what is fortnight? Fortnight is equivalent to 15 days, right? Okay, so let's say today if I want to maintain cash reserve ratio, okay, so I need to maintain certain percentage of what? Certain percentage of demand and time deposit. Okay, demand and time liability in India. Now, how much is the amount of demand and time liability which you need to consider? You need to consider it on the last Friday of second preceding fortnight. Okay, so if you are talking about today, okay, if you are talking about today, let's say 1st Jan or let's say 1st June 2023. So second fortnight, one fortnight will be preceding. Let's say this would be on 15th May. Okay, so this would be on 1st May. So in this particular date, the last Friday, okay, the last Friday, whatever is the balance of your demand and time liabilities in India, okay, of that certain percentage, the percentage will be prescribed by what? The percentage will be prescribed by the Reserve Bank of India. All right, so read this once again. Every banking company not being a scheduled bank has to maintain cash reserve ratio of at least certain percentage of total of its demand and time liabilities in India as on the last Friday of the second preceding fortnight as specified by Reserve Bank of India from time to time. Okay, so second preceding fortnight as prescribed by Reserve Bank of India from time to time. So as of now the prevailing rate is 4%. It would keep on changing. Alright. So every banking company not being scheduled bank. So here they are not talking about the scheduled bank. So here they are talking about other than scheduled bank. Alright. Okay, so restrictions on loans and advances. Let's talk about the restrictions on this loans and advances. Okay, no banking company shall grant any loans or advances on the security of its own shares. Okay, they cannot take their own shares as collateral security and provide the loan. Okay, so not possible. Enter into any commitment for granting any loan or advances to or on behalf of its directors, any firm in which the director is interested as a partner, manager or employee, or any company not being a subsidiary of the banking company or a company registered under section 25 of Companies Act, that is nothing but NPO, of which any director of the banking company is a director, manager, employee or guarantor. Okay, and holds substantial interest, or any individual in respect of whom any of its director or partner is a guarantor. So basically what they are trying to say is banking company will not be providing any loan if they are taking the collateral security as its own shares. If I am holding shares of SBI, okay, I cannot provide these particular shares as collateral security and take the loan from SBI, not possible. Okay, same way the banking company will not be providing any loan to its directors. Look at this. So enter any commitment or granting any loans or advances to or on behalf of the directors, any firm in which the director is a partner or he is an interested person or he is holding substantial interest in that particular organization. So basically wherever a particular director is related, that particular banking company cannot provide loan. Okay, so if I am talking about, let's say, HDFC Bank, I cannot provide loan to organizations wherein the director of HDFC Bank is interested. He should neither be a partner in any of the partnership firm. Okay, so if he is a partner in a partnership firm, this bank cannot provide loan to such partnership firm. If this particular director is interested, okay, in a particular organization, NPO, or any of the organization wherein he has got substantial interest, such organization the bank cannot provide the loan. Okay, there is restriction with respect to the same. Same way if the director has provided any guarantee, okay, so the bank cannot provide any loan. If I want the loan and one of the director of the bank is providing the guarantee, the bank will be rejecting my application and it will not be providing any loan. Simple. Alright, so let's talk about the next thing, that is liquidity norms. Okay, so every banking company has to maintain in cash, gold or unencumbered approved securities an amount at percentage prescribed by the RBI of its demand and time liabilities in India. However, this percentage is changed by the RBI from time to time considering the general economic condition. So what is this? This is liquidity ratio. Statutory liquidity ratio is what we call. Okay, so every bank, just understand the meaning of the term, more than sufficient. So when it comes to statutory liquidity ratio, banks has to maintain some liquid funds, that is in the form of cash, gold and unencumbered securities. Okay, so how much percentage, that would differ from time to time, okay, as prescribed by the RBI, which would differ from time to time. Okay, so this would be called as statutory liquidity ratio. Okay, so normally we'll be calling it as what? We'll be calling it as SLR. Okay, so let me just write the meaning of this particular term. The banking company shall maintain certain percentage as prescribed by the Reserve Bank of India in the form of cash, gold or other unencumbered approved securities. Okay, just like Cash reserve ratio, even this particular rate would be changing from time to time. Okay, so the SLR shall also change from time to time. Okay, even this amount would be changing from time to time. All right. Okay, so let's talk about the next thing. This is what is crucial or relevant with respect to this chapter: accounts and the balance sheet. Okay, so at the expiration of each calendar year or at the expiration of the period of 12 months ending on such date as the central government may by notification in the official gazette specify in this behalf, every banking company incorporated in India, okay, in respect of all the business transacted by it, and every banking company incorporated outside India in respect of all the business transaction through its branches in India. Either the banking company should be situated in India, or if it is a foreign banking company, okay, so its branches must be situated in India, shall be preparing, okay, shall prepare with reference to that particular year or period as the case may be, the balance sheet and profit and loss account on the last working day of that particular period, okay, as the case may be, in the form set out in the third schedule, okay, or as near thereto the circumstances admit. So basically what they are telling is, every banking company which is incorporated in India or any foreign banking companies which has got branches in India, okay, those branches will have to prepare the financial statement, that is P&L account and balance sheet, as per this third schedule of the Banking Regulation Act. We'll be talking about the format and all right. The balance sheet and profit and loss account shall be signed by the manager of the principal officer of the company where there are more than 3 directors of the company, but at least 3 of those directors where there are not more than 3 directors, by all the directors in case a banking company incorporated in India. Okay, so basically what they are trying is the signing authority. Okay, who should be signing these financial statement? The balance sheet and profit and loss account shall be signed by the manager, okay, that branch manager or the principal officer of the company where there are more than 3 directors, okay, and then at least 3 directors where there are not more than 3 directors. Okay, so by at least 3 or those directors where there are not more than 3 directors, but by all the directors in case the banking company incorporated in India. Okay, let me just write this particular point: financial statement of banking company. Okay, so the banking company shall prepare the profit and loss account and the balance sheet as on the last working day. Okay, so the P&L account and the balance sheet shall be signed by the manager. Okay, so manager or principal officer, okay, and by at least 3 directors in case the banking company has more than 3 directors. Okay, and if the directors are by all the directors, if the number of directors is less than 3. Okay, so basically what they are trying to say is, manager and principal officer mandatory, either the manager or principal officer of that branch mandatorily he'll have to put the signature along with it. Okay, so the directors also have to put their signature. If the banking company has got more than 3 directors, at least 3 directors will have to put their signature. If the banking company has lesser than 3 directors, in that case all the directors will have to put their signature. Is this clear? All right, so that is what is being told over here. In case of banking company incorporated outside India, the same must be signed by the manager or agent of the principal officer of the company in India. The disclosure shall be done as per the provision of the master circular. Okay, so in case of banking company incorporated outside India, the financial statement shall be signed by whom? Look at this. Shall be signed by the manager or agent of the principal officer of the company in India. Shall be signed by the manager or the agent of the principal officer in India. Alright, now let's talk about the accounting with respect to the banking company. What are the points which we'll have to remember with respect to accounting in case of banking company? Okay, so let's understand this. Under banking bookkeeping system, every transaction particularly concerning the customer is entered in the personal ledger directly from the vouchers as soon as it takes place. Now, every person would have opened, okay, a bank account, right? Okay, if you are opening a bank account in a particular company, you will become the customer of that particular bank. So, any transaction which you enter into has to be given effect to your personal ledger. So, bank will be maintaining personal ledger of all its customers. Okay, so look at this. As soon as a particular transaction takes place, any money which you are depositing or withdrawing. Okay, so look at this. The transaction is entered in the personal ledger directly from the voucher as soon as it is taken place. Okay, as soon as you deposit the money or as soon as you withdraw the money, immediately, okay, your personal account has to be given effect. Okay, that is what they are telling. The objective of this system is to keep up to date detailed ledger. Okay, up to date detailed ledger has to be maintained. That's the objective. To balance the trial balance every day. Every day the trial balance has to be balanced, and to keep all control over the agreement with respect to details ledger, to keep a proper control over each and every customer or individual. Okay, so they'll be doing what? Immediately, as soon as the transaction take place, immediately they'll be giving effect to your personal account. Suppose you just deposit some money to your bank account, immediately they'll be passing an entry in your personal account. Suppose you're withdrawing some amount from your bank account, immediately they'll be giving effect to your personal account. Hope you guys understood this particular point. Okay, so immediately as soon as the transaction take place in the personal account, just give effect for the same. All right, so let's look into the next thing. Main characteristics of bank's bookkeeping system. What are the features of this bookkeeping system of the bank? So the first thing is voucher posting. Entries in the personal ledger are made directly from the vouchers, okay, instead of posted from the books of primary entry. So you will be submitting a particular voucher, right? So if at all you are depositing any amount, you will be filling up an voucher and then you will be giving the same to the person. Directly from this particular voucher, the banking person will be passing the entry. Voucher summary sheet. The voucher entered into different personal account each day are summarized, and summary sheet total of which are posted to the control account. At the end, once the banking hours are closed, okay, or banking hours are ended, so the total vouchers, a summary will be prepared and the amount will be, a bulk entry will be passed to the respective control account. So daily trial balance, okay, so daily the trial balance will be balanced. Okay, the general ledger trial balance is extracted and agreed every day. So continuous check. All the entries in the detailed personal ledger and summary sheets are checked by persons other than those who made the entry. So one person will be authorized to pass the entry from the vouchers. As soon as the person is depositing any amount, he'll be filling up the vouchers, right? If he's depositing check also, he'll be filling up some information. So immediately one person will be entering into the respective personal account. At the end, there'll be one more person who will be cross verifying whether all the entries whatever has been passed is correct or not. Who will be the person who will be verifying this? Will it be the same person who passed the entry? No. Okay, it would be the person other than that person who passed the entries. Then control accounts. A trial balance of detailed personal ledger is prepared periodically, usually every 2 weeks, agreed with the general ledger. Okay, so a trial balance again will be prepared on a weekly basis. Every 2 weeks you will be preparing and you will be agreeing the same, so that if there is any mistake, okay, then and there it is rectified. Okay, that is the objective. Double voucher system. 2 vouchers are prepared for every transaction not involving cash one debit voucher and another credit voucher. So there will be 2 voucher system. Okay, one is debit voucher system, another one would be credit voucher system. That is, for deposit of money there will be a separate voucher, and same way if at all you want to withdraw the money, there will be separate vouchers. Alright, so let's look into the next information, the books of accounts when it comes to banking company. Let's talk about this. Okay, nowadays the daily transactions of bank are numerous. Okay, a lot of transaction will be happening in the bank, right? So a lot of people will be maintaining their bank account and they'll be doing a lot of transactions through this particular banks. All these transactions are to be recorded immediately to reflect the exact position of each customer's account. So as soon as the transaction takes place, immediately all these transaction has to be recorded. Okay, so that the customer's account show a true balance, the exact balance. If I deposited money, that particular deposit has to be added up. If I withdraw the money, that particular money has to be deducted from my bank balance. Immediate effect has to be given to the personal account. Therefore, bank has to adopt specialized system of bookkeeping which will ensure immediate entry of numerous transactions and keep an internal check on the books of accounts. Okay, to achieve these objectives, bank generally maintain a large number of subsidiary and memorandum books in addition with the principal books of accounts. So, in order to achieve this particular objective, they'll be maintaining a large number of subsidiary books. What are subsidiary books? These are the books wherein a lot of transaction happens on a day-to-day basis. Okay, a large number of subsidiary books will be maintained. Okay, so let us see what exactly are the principal books of accounts which they will be maintaining and what exactly are the subsidiary books which they will be maintaining. When it comes to principal books of accounts, okay, the general ledger, okay, control account of all the personal ledgers, okay, profit and loss account, assets account and contra accounts. Okay, same way profit and loss ledger, they'll be preparing detailed account of revenue and expense. Revenue separately and expense separately. Same way when it comes to subsidiary books, okay, personal ledger of all the customers. Look at this. Current account ledger, savings bank account ledger, fixed deposit account, loan ledger, overdraft ledger, cash credit ledger, customers acceptance, endorsement and guarantee ledger. When it comes to bill register separately, inward bill for collection, outward bill for collection, bill discounted and purchase register. So basically, when it comes to subsidiary book, they'll be maintaining a lot of subsidiary books separately for savings bank account, current account, bank overdraft account, loan account, okay, cash credit account, customers acceptance and endorsement account. Same way with respect to bills register, they'll be maintaining three things: inward bill for collection, outward bill for collection, and then bill discounted and purchase register. Okay, those bills which are discounted. Okay, even that will be shown separately. All right. These are subsidiary books. Now let's talk about subsidiary registers. Okay, when it comes to subsidiary registers, okay, are kept for various types of transaction: demand draft, telegraphic transfer, mail transfer, okay, issued on branch or agencies. Demand draft, telegraphic transfer, mail transfer received. Okay, this is issued, this is received. Okay, and then letter of credit transaction and then letter of guarantee. So these are separate transaction. Okay, one is with respect to demand draft. Okay, DD is what we normally call DD, which is issued by other branch, and DDs which is received, okay, from other branch. Okay, so suppose if I'm preparing a DD and issuing it to some other branch, separate register I need to maintain. Same way, DD which is received from some other branch, okay, I'll have to maintain a separate register. Same way, I'll also be maintaining cash credit, okay, that is letter of credit as well as letter of guarantee. This is mainly with respect to export transactions. All right. Okay, so let's look into the next thing, memorandum books. Okay, along with this, I'll also be maintaining other memorandum books like departmental journals, cash department. Okay, so cash department receiving cashier's cash book, paying cashier's cash book. If you visit a bank, there'll be two people, right? So one person will be accepting the deposit, other person he'll be giving the money. Okay, so you'll just be writing a self check and he'll be giving you the money. So receiving cashier and paying cashier separate memorandum has to be maintained, and then main cash book and then the cash balance account. So receiving cashier will be preparing one memorandum, issuing cashier will be preparing another memorandum, and then a main cash book will be prepared, and at the end the cash balance book will be prepared, like how much is the balance of cash at the end of each and every day. All right. Okay, so along with this, it will be maintaining another book called as clearing department book. Okay, so outward clearing for checks received from the customer. See what the banking company does with the check, whatever it is being received. So if I'm a particular customer and if I've got a bank account in HDFC, I would have received the check from my customer. Okay, he will be having the bank account somewhere else. Let's say he is having bank account in SBI, so he would have drafted his SBI check and he would have issued it to me. Okay, so what I do with this check is I go and deposit it with the bank. Okay, so what the bank does is it will be sending it for clearance. Okay, that is why it is called as outward clearing. Okay, so these checks, whatever it has collected from the customers, that is the banking company, whatever the checks which it collects from the customers would have deposited the check, right? So they'll be sending it for the clearance. Okay, so they'll be maintaining a separate register with respect to the same. Clearing check received book. Okay, bank wise list of all the above. Okay, so how much checks did I receive from SBI, how much checks did I receive from other banks. Okay, so let's say Canara Bank, okay, or any other bank for that matter. Same way inward clearing. So same way, if I also would have prepared the check and issued it to a lot of suppliers, right? So they would have deposited in their respective account. Okay, so if I'm having a bank account in HDFC Bank, I would have prepared the HDFC Bank check and I would have given it to the supplier. What the supplier will do is he would have deposited in his SBI account. Okay, so that particular check will be sent to this particular HDFC branch. Okay, that is inward check. Okay, so it will be maintaining a separate memorandum book with respect to the same way with respect to loans and overdraft. Register for shares and other securities held on behalf of each customer. Subsidiary book of securities giving the details of government securities. Go down registers maintained, okay, by the go down keeper of the bank. Price register giving the wholesale price of the commodities pledged with the bank. Okay, overdraft sanction letter, drawing power book, delivery order books, and then storage books. All these things not relevant, guys. So whenever I take an overdraft facility from the bank, I'll have to submit a lot of reports. So these are the details which will be maintained by the bank. Same way deposit department. Okay, what books the deposit department will be maintaining? Account opening and closure registers. So when was the account opened? What are the documents or the relevant supporting document which were issued at the time of opening of this particular account? Okay, so for fixed deposit rate register giving analysis of deposits according to the rate. So fixed deposit rate for different person it will be different, right? For senior citizen it will be different, for women it will be different, for different people it would be different. So what exactly is the prevailing rate? Okay, that has to be mentioned. The due date diary, when exactly these deposits will be maturing. Okay, you will be maintaining a separate register for the same. Specimen signature book. Okay, so specimen signature, the customer would have signed, right? Every time they'll be checking the signature whether it is matching with what is being provided by the customer or not. All right, same way. Okay, so the next thing is establishment department. What are these establishment department? Salary and allied registers such as attendance register, leave registers, overtime registers. Okay, this is with respect to establishment, their workers. Okay, the people who are working in the banking companies. So register of fixed asset, furniture fixtures, stationery register, old record registers, then the general register. Okay, so signature book of bank officers, private telegraphic code, and the different codes will be maintained by the same. Okay, so statistical books, all these things if you just go through it, more than sufficient, guys. Okay, not much questions will be asked from this particular area. Clear? Okay, so after this they'll be maintaining some statistical books. Okay, let's see what exactly the statistical book which are maintained by the same. So these are kept in different banks based on their individual requirements. Some of the common purpose are to record average balance in loan and advances, to record deposit received and the amount paid each month in various department, number of checks paid, number of checks, drafts, bills collected. So for the purpose of statistical record, they'll be maintaining separate thing. How many checks did they collect on an average during a particular month? How many checks did they issue? Okay, how much is the average balance in the loans and advances? How much is the average balance in the deposits which is available with us? All right. Okay, so this is what is the crucial part. Look at this. They have given you the form of the balance sheet and profit and loss account. This is mentioned in the 3rd schedule of the Banking Regulation Act. Form A would be the format for the balance sheet. Okay, so balance sheet as usual, enter the name of the banking company. Balance sheet as on so and so year. Okay, so earlier we used to call it as note number. Here you will be calling it as schedule number. You will have to remember the schedule number. So schedule number 1. So their notes to accounts we used to change, but here the schedule will be same. Schedule 1 always it would be with respect to capital. Schedule 2 always it would be with respect to reserves and surplus. Schedule 3 will always be with respect to deposits. Okay, you will have to remember this schedule numbers also. Clear? All right. So let's look into this. So when it comes to financial statement, we have already written over here. Okay, so financial statement, the banking company shall prepare. So I think schedule 3 was not mentioned over here, right? P&L account and balance sheet. Okay, so as per Schedule 3 of Banking Regulation Act. Okay, as on the last working day. Okay, this is the date on which they'll be preparing this balance sheet and P&L account. Okay, so here they have given you the format of this particular balance sheet and P&L. Okay, so let's look into this particular format. Alright, so let's look into this. So balance sheet, the first thing would be capital and liabilities as usual. Okay, so capital, reserves and surplus, deposits, borrowing, other liabilities and provision, and you will have to remember these particular schedule number. Schedule 1 stands for capital, Schedule 2 reserves and surplus, Schedule 3 would be with respect to deposits, Schedule 4 will be with respect to borrowings, and then Schedule 5 will be with respect to other liabilities. 1 to 5 it is liabilities. Very easy guys. Capital 1, reserves and surplus will be 2, and then 3 would be what? Okay, 3 would be the deposits. Okay, first it is deposits and then it is the loan whatever we have taken, borrowings. Okay, deposits and then borrowings, and then the last one, that is the fifth one, would be other current liabilities and provision. Okay, and then when it comes to assets, look at this. The way in which we'll be maintaining over here is the liquid assets will be maintaining initially. Okay, so cash and balance with Reserve Bank of India. Okay, that is 6. Balance with other banks and money at call and short notice, that is 7. Investment, that would be 8, and then advances would be 9. 10 would be your fixed assets. Okay, so 10 would be your fixed asset. 11 would be your other assets. Okay, so schedule 11 would be other assets. Contingent liabilities. Okay, so with respect to bills sent for collection, that would be your schedule 12. So you will have to remember all these schedule number. Okay, you will have to remember all these schedule number. Okay, so let me just write this. Format of balance sheet, okay, as per part A of schedule 3. All right. Now, when it comes to this particular format, look at this. So, it will be having schedule number, figures at the end of the current year and previous year. Okay, so particulars, schedule numbers. Okay, so figures at the end of current year and previous year. So first thing would be what? The first thing would be capital and liabilities. Okay, this would be capital and liabilities. Okay, so here we have got totally 5 schedules. Okay, you will have to remember these schedule. The first thing would be capital. Okay, first thing would be share capital or capital, and then we will be having reserves and surplus. This would be note number 2, and then we have got deposits, borrowings, and then other liabilities and provisions. Okay, this would be 1, 2, 3, 4 and 5. Okay, so all the figures for the current year and previous year is what you will be showing. Okay, this is with respect to liabilities and capital. So then you will get to know the total. This would be the total. So after this, you will be showing the assets. Okay, so you will similarly be writing the assets. Okay, look at this. When it comes to assets, okay, you will be showing in other sequence. That is, the liquid assets is what we will be showing initially. Look at this, cash and balance with RBI. Then it is balance with other bank. Okay, so balance with other bank and money at call and short notice. Then we have got investment. Okay, so advances. Okay, fixed assets and other assets. Okay, I'll just write this. So first thing is cash and balance with RBI. Okay, so balance with other banks and money at call or short notice. Okay, so money with call or short notice, and then we have got what? Then we have got investment. Okay, so investment, advances, fixed assets, and then other assets. So here totally we have got 6 items. Okay, so 6 items. Schedule number would start from 6. This would be 6, 7, 8, 9, 10 and 11. Okay, so same way we'll be writing the figures over here. Okay, so after this you'll get to know the total. Okay, and there will be one more item, that is schedule number 12, that would be with respect to contingent liability. Okay, we'll be showing it separately. Okay, so contingent liability. Contingent liability for what? Contingent liability for bills sent for collection. This would be your note number 12. Okay, so whatever is the value, you'll just be mentioning. This would be the format of your balance sheet. Is this clear? This is how your balance sheet would appear. Okay, you will have to remember all the schedule number. See, very easy guys. Liabilities, we have got 5 schedules. What are those? One would be capital, then we have got reserves and surplus, deposits, and then borrowings. Okay, first it is deposit, then borrowings, and then other liabilities and provision. Okay, so 5 things or 5 schedules when it comes to liabilities. Then when it comes to assets, cash and balance with Reserve Bank of India. Okay, so balance with other banks and money at call and short notice, that is schedule number 7. Then 8 would be your investment, 9 would be your advances, 10 would be your fixed asset, 11 would be your other assets, and 12 would be your contingent liabilities, that is bills sent for collection. All right, and then when it comes to P&L account, the format is very simple. This would be part B or form B. Okay, you can just call it as part B or form B. Okay, so I'll just call it as form A. Okay, now let's talk about this particular format of P&L account. Okay, so format of P&L account as per form B. Alright, so let's talk about this P&L account. Look at this. The schedule number 13 would start from here. Here we have got 13, 14, 15 and 16. Alright, so profit and loss account for the year ended so and so. Income. So 2 incomes is what you'll be showing. One is basic interest which is earned and other income. Interest earned and other income. This would be the total. Same way expenditure. Interest expended and then other operating expenses. Okay, 15, 16. So provisions and contingencies. So you'll get to know the total of expenses as well as revenue. Profit would be what? The difference between these two. Okay, so profit or loss, net profit or loss for the year. So net profit or loss which is brought forward, you will get to know the total amount. So transfer to statutory reserves, transfer to other reserve, proposed dividend and balance carried to the balance sheet. Okay, so very simple format. So let's just prepare the same. So when it comes to P&L account, quite simple. Okay, so you will be maintaining 2 things. Okay, so one would be your income. Okay, so income, again 2 things. Okay, one is interest earned and then other income. Okay, so this would be 13 and this would be 14. Okay, same way expenses. Look at this, expenditure or expenses. Okay, so here again 2 things. Interest expended. Okay, that is the interest what we paid. Interest expended and then other expenses, other operating expenses. Okay, so this would be 15 and 16. Okay, this would be 15 and 16. Okay, so here also you will be doing the total. Okay, so same way here also you will get to know the total of expenses. Okay, this is again total. All right, so once you are done with this, okay, so net profit or loss for the period. Okay, that is for the current period. So net profit or loss brought forward. So net profit or loss for the period, net profit or loss which is brought forward. So here you will get to know the total again. After this, if at all there is any appropriation, that is any amount whatever has been transferred to reserve, you will just be showing it over here. Okay, so out of this, transfer to statutory reserve. Okay, so transfer to other reserves. Okay, so proposed dividend and then balance transferred to balance sheet. Okay, so this is what you will be showing over here. Simple. So very simple thing, you just need to remember these particular schedule number, guys. Okay, so I want you guys to remember these schedule numbers. I'll just repeat this one more time, okay, just for the sake of your understanding. It's quite easy. Okay, so look at this. When you comes to balance sheet, okay, so balance sheet totally we have got how many schedules? 12 schedules. And when it comes to P&L account, here we have got 14. So totally 16 schedule is what we have got. Okay, easy to remember. Again, when it comes to liabilities, we have got 5. Okay, so assets we have got 6. Okay, so when it comes to liabilities, what and all do we have? 1 is for capital, 2 is for reserves. Okay, so 3 is for deposits. Okay, 3 is for deposits, 4 is for borrowings. Okay, 5 is for other liabilities and provision. Clear? So done with these 5, easy to remember. When it comes to this particular thing, assets, okay, so what and all do we have? So cash and balance with RBI. Okay, so balance with other bank and money on call or short notice. Okay, so this would be 6 and 7. Okay, so this would be 6, this would be 7, and then when it comes to 8, okay, so what would be 8? 8 would be your investment. Okay, so 8 would be your investment. What about 9? 9 would be your advances. Okay, so 1, 2, 3, 4, 5. Okay, so 10 would be what? 10 would be your fixed assets, and then 11 would be your other assets. Okay, so then when it comes to P&L account, 12, 13, 14, sorry, here we got it as 11, right? So we have got one more thing, 12, that is with respect to contingent liability. Contingent liability will be showing it separately. Okay, so contingent liability will be shown separately. Clear? So totally 6 assets and then 1 would be your contingent liability. Clear? And then when it comes to P&L account, 4 things. Okay, very easy to remember. So schedule, so till here we were done with 12, right? So 13, 14, 15 and 16. I'll just write it over here. So this would be interest earned, 14 would be other income, 15 would be interest expended, and then 16 would be other operating expenses, okay, and provisions. Clear? So these are your 16 schedules. I've numbered it over here. I want you guys to just remember these 16 schedules. Okay, so just go through this particular part. In the next class, we'll be learning about each and every schedule in detail. Look at this. When it comes to schedule 1, that is capital. Okay, so we'll be learning in detail what are the content of it. Schedule 2, reserves and surplus, we'll be learning in detail. So only if you guys know these schedules, okay, you'll be able to prepare the financial statements. Clear? So we'll be learning about these particular things. Okay, the content of each and every schedule. After this, little more theoretical aspect, and then finally we'll be starting up with this solving the illustrations. Okay, so we have got close to about 12 to 13 illustration which we'll be looking upon. Okay, let's see how many illustrations are there. We have got 14. 14, 15, 16. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . 17, 18, 19, a lot of illustration has been given. Yeah, so close to about 19 illustration. Okay, so in the next class we'll just be looking into each and every schedule. By that time, just try to remember this particular schedule number. Okay, just try to remember this particular schedule number, and then we'll just look into the content of each and every schedule in the next class, and then we'll straight away start solving the illustrations. Okay, we'll be solving all these 19 illustrations, don't worry. All right, so thank you so much guys. Make sure that you go through whatever we learned in today's class. Okay, so thank you so much guys.